Hi there, welcome to Grain TV. It's Thursday, June 30th, and it was a day of USDA reports and data to sift through. But we'll get to that in a minute. Let's take a look at the Grain Edge trading platform and see where we closed. In Chicago, beans crushing it to the upside, gaining 35 cents a bushel. Corn on the downside, 8 3/4 cent loss, and wheat closing the day pretty much unchanged from where we started, even after a string of new USDA data. Let's start first of all with export sales, the weekly numbers that came out this morning, and these numbers were kind of a wash for corn. They were supported for beans and wheat, and so let's take a look at the data we found here. First of all, old crop corn exports were pretty light, or really light actually, coming in at only 468,000 metric tons versus 700 to 1 million expected. New crop were better than expected at 536, but overall when you look at old crop, new crop combined, it wasn't a terribly impressive week as we just barely broached the 1 million metric ton mark. On the other hand, beans crushing it above 1 million metric tons, coming in nearly 1.5 million metric tons combined old crop and new crop, and wheat coming in a respectable 645,000, well above expectations at the high end that were 600,000 metric tons. But the real focus on today's trade was really the USDA stocks report and the acreage report. This is the first chance we've had to look at formal survey data from USDA since March 31st, so all eyes were on this report, and we did get some surprises, not to be outdone from their March report. The USDA did throw some surprises. First of all, I think the biggest surprise for everyone was the much higher than expected corn number. Corn acreage coming in just above 94 million acres. That's above even the high end of analyst expectations. Remember, traders had been expecting that as a result of bean prices increasing, there'd be a shift from that March 31st number to more beans, less corn, and we actually didn't see it. We actually saw more corn in this report, the June 30th report, compared to the March 31st. So that was somewhat of a bearish driver in the corn market. In beans, although the number itself is not terribly different than what analysts expected, there was some immediate reaction to these numbers in the soybean trade, and I think some people were surprised that it wasn't lower, that we didn't come in lower than, didn't come in higher than what we thought. And so 83.7 versus 83.8 on the surface, while not terribly different than expected. Obviously, there were some people in the trade that had been looking for a much bigger number above 84 and not getting it. Then we saw a pretty quick liquidation and a pretty quick move higher that we'll discuss here in a minute. In wheat coming in surprisingly at the high end here, coming in at 50.8 versus 49.8 expected. Quarterly stocks, these numbers were particularly problematic for corn, where we saw well above expectations. You know, we had expected 4.5 billion bushels, coming in at 4.72. Beans a little bit higher than expected, and wheat coming in right in as expected. But let's take a look at the reaction to the soybean trade here. And again, those soybean numbers on the surface don't look that different from what was expected, but clearly the market reacting very sharply. This is new crop, no beans. A 5-minute bar chart, and you can see the big announcement around 11 o'clock Central Time, and you can see going from a low on that trade, 1092, up to a high of almost 1150, and so a really volatile 50-cent move in about 5 minutes. Now, we managed to keep pushing a little bit higher, getting as high as 1160, but we didn't back off much. So to me, this looks like a sign we might be in line for testing the recent high set back about 2 weeks ago. As we look at the daily bean chart from our grain hedge trading platform, the high printed on that no bean contract, 1186. Look for that as a potential testing ground for this market. Clearly this market wants to move higher. I think the bean number caught some people off kilter, and as we move into the 4th of July weekend this weekend, and the weather forecast potentially becomes hotter and drier as we get into the later part of July, which is critical for beans, this potentially has some stimulus here to keep moving higher. So keep that in mind as we head into the long holiday weekend. We may get more short covering here as we go into Friday's trade. That's all we got for today. As always, visit us online at grainedge.com to learn how we can help you in your own marketing situation, or give us a call, 877-472-4607. As a Grain Edge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.